Well, I am super excited about this workshop today. We've got Matteo going to cover Freelancer Financial Essentials. So this, I think we set this up, or this started cooking up like a month or so ago. Matteo, is that right? Yeah. So this was like one of the first ideas I had when we started doing these workshops. I was like, it'd be really dope if Mateo came on here and kind of shared about his journey and how he got into financial planning and all that. So, Mateo brings a tremendous amount of experience. He's been freelancing for over 6 years, almost 7 years at this point. But what's really interesting about Mateo's journey and background is I want to say maybe a little more than a year ago, he started getting into financial planning, but specializing in freelancers, solopreneurs, startups, small businesses. And it may not make sense at first, but I feel like this is the perfect niche to be in because Mateo, knows what it's like to be a freelancer, knows what it's like to be a solopreneur. So, um, I can't think of anyone better to take financial advice from in this space. So with that, Mateo, I'll hand it over to you and tell us how we can manage our finances in this crazy world of freelance.
Sure, yeah. And thanks for the great introduction there. So I'm going to share my screen here. Let's see if I do this right. So- Okay. Looks like I shared my screen. You're looking at Discord. That look right, Chuck? I can't hear you. The chat.
Can you hear me?
Yeah, now I can.
Okay. Yeah, we can see it.
Okay, cool. So I have a little PowerPoint here. Yeah, my background, I've been a freelance data scientist. I sort of specialize in data extraction. I got into working with some clients in the financial space and learned about financial planning more. And, I was reading things on the internet. I didn't find much out there for freelancers specifically, like things like buying a house are kind of confusing. How to manage your finances are a little bit different because you really are like a business. And I really got more interested in financial planning, and then when I looked for a financial planner myself, there weren't many financial planners that worked like a freelancer. So everyone was like, you must have this much money. You're going to pay me this much per year, and then I'll do all this stuff for you. But I really just wanted someone to sort of do a check in when things get confusing so I could, get help. And then if I don't need any more help, just leave it at that. It seems like a more pure, more honest way of working versus the standard way where they charge a percent of your assets. So that's what I set out to do. So essentially, I'm becoming like a freelancer financial planner for freelancers. And there's other models too that I'll go into. But yeah, and then in this PowerPoint, I wanted to go over just general business advice for freelancers, like how you should manage things as a business, being a freelancer, and then more personal financial planning geared towards freelancers themselves. If you have any burning questions or if I miss something big, feel free to try to interrupt. I think we're going to do questions though at the end for most things. So I'm going to try to stay on track with the PowerPoint and get cruising here. So, all right. And then formal poll, I mentioned, solopreneur, freelancer, employed, and then a mix. Freelancer, a lot of people don't feel like it's a real business, but it is. A lot of clients will try to strong arm you and say, oh, sign this agreement, you're doing work for us. This is how everyone has to do it. But really, you are a business partner. And once you sort of get into that mindset, it really helps you do a better job. Um, what's it called? A better job, running your business. People take you more seriously, and you get stronger, better clients. Always found the cheap clients treat you the worst and they pay the least, but the best clients treat you well and pay you well. So you really got to hold out and know your value, but it is hard. And if you're considering freelancing or solopreneurship, it is hard. It's the most I ever had to work. Starting my freelancing career, trying to find out what projects gave me credibility. I did a lot of my work on Upwork to get me those projects that I wanted to get. And then you're always thinking about the business, so it can be hard. But once you get going, I think it's a better path than being a normal employee because you have multiple sources of income and you can sort of turn up or turn down your income a lot more variably. So this is just a picture guy having a vision, kind of alone that I found. So yeah, if you're considering becoming a freelancer, I would say you probably should have 6 to 12 months of living expenses. That could be like a ramen budget, bare bones, not spending much money on anything, or you could do various thresholds there to sort of think about, what that looks like in terms of savings. Health insurance, that's a big one people always worry about. You can get health insurance through your employer, through Cobra. That can be pretty expensive though. Another thing you can do is use the marketplace or call insurance companies directly. And I found that actually works out great, and I'm able to sort of get a plan that works for me with some good tax benefits that I'll talk about later. But yeah, if you're trying to be a freelancer, you should really think of it as a business. Give yourself a roadmap. X months, I should be doing this. Spend some time on marketing. If you're weak on sales, you have to work on that and really practice. It's a bit of a numbers game, and then knowing where to focus, because different work is what's the word? If you work on the wrong thing, you could be doing a lot of the wrong thing and not doing as well as what do you want to be doing. So sort of have a vision and then sort of reevaluate your business every once in a while. And generally, you should have some expertise before, jumping into freelance. I did it because all the companies wanted me to be a master's in data science or something to do data science. And I was just like, you know what, that's silly. I think I can still do this. And because I've got a technical background with my major and minor. And yeah, so that's sort of how I sort of forced my way in over time, was freelancing. So that's another path to do it, but you just have to know yourself and take the risk. And from a business standpoint, once you have a business, you get to deduct lots of things. So if you have to buy, I don't know, if you have to drive to a client for a client meeting, that's probably a deductible expense to some capacity. Um, Things like advertising, business cards, websites, things that are ordinary and necessary are things that you can deduct. But the IRS and the government won't let you deduct things if you're not acting like a business. If freelancing is something you've done for a few friends, but you're not really trying to make a profit or working on it regularly, that becomes more like a hobby, and they might not let you take that. Um, it all depends on the facts of what you're doing, but in general, if you're trying to be a freelancer or start a business, act like a business, you'll make a better business and you won't have any issues with the IRS. If you're really curious, there's a public repository of tax court cases. And there's a bunch of tests that people do that the judges will look at to say, is this, for profit or not? And here's one thing I've talked about before with clients, and something I think of a lot is having a mix of clients. So if you have too much income from one source, let's say even it's Upwork. If Upwork kicks you off the platform, you could be in a lot of trouble. So you want to make sure you're diversified with your income streams, and then there's pros and cons to all that. If, let's say, hypothetically, as a financial planner, the data entrepreneurs wanted to like me as a financial planner. If I treat someone bad in this group, then everyone's going to know about it. It's going to really hurt my reputation. When you have clients that don't know each other, I mean, even though it's bad to say, if you're having a really rough week, you can focus just the bare bones on one and then let one fall to the wayside. Not the most best situation to be, but it's something you can do. If clients don't know each other very closely, you can raise rates on one and not on the others, and use that as a way to see where you are in the market with less risk. And that way, you get to experiment more. Whereas if you're an employee, you have to wait for a raise. Freelancer, you set your rates. If you increase them on one, they say yes. Then you can set them on the other ones, and then if they say yes, you're in a great spot. It really reduces your risk. And another thing with freelance income, I've always liked having like an anchor client. So that's your bread and butter. So on this chart, I did Matplotlib. I used to be a data scientist. Pretty ugly charts, but you probably worked with these yourself. And here's just a steady client. So let's say they pay you $1,000 a week. So I'm showing here. You have your random clients. They could pay you a lot of money, but not as frequent. So really just average your income, and then when you add them all together, you get much better situation. And having multiple lets you learn new things. If you get too comfortable with a client, you may let your skills atrophy too. So it's good to stay on your toes a little bit in the freelance marketplace. Right. So as I've tried to budget, it's always been best for me to let my expenses stay roughly fixed, for a living, and let the freelance income fluctuate. And I say that because, if we have this all clients plot right here where I summed everything together, if I had a great week and made $4,000, but then I spend enough that it takes me down to my average, I'm dropping my average. So if you get into that mindset, where your expenses and your income are linked, you run the risk of not managing your finances effectively. So that's a trap that I fell into at first, but grew out of to, do a better job sort of understanding how the income works. Because you're going to have great weeks, potentially really good weeks, really good months, and then you're going to have down months. So you got to make sure you don't take too much from the up months that it hurts your down months more than it should. And on my website, I think I'll be sending out these slides. You can see I've created a chart that shows what I'm talking about having different clients. So on the right here, we have revenue streams. So say you have an anchor client, they pay you $2,500 a week, small client, and then you have a new idea you're doing, like selling books, or in my case, hot sauce. One, I do have a really good hot sauce that I've been told I should sell, but I'm always on the fence about starting that. But anyways, if you look at this, what I'm simulating here is how it looks with all your clients. So there's different scenarios. Let's say you keep all your clients. Let's say that big client, how much risk do you have if you lose them? So if you look here, this is your income. If you lose the big client, that's quite a big drop off. And then if you look at the left here, this is where I'm showing how much surplus income you get every week, every month. And then if you keep all, your company budget, let's say that's spending lots of money on things, going out every week, maybe going on vacation once a month. Ramen budget is not doing anything, rice and beans or whatever is the least you can afford to spend. And then okay, somewhere in the middle. You can look at these values just to see how overexposed you might be to a client or how secure your position may be. Because as a freelancer, you don't necessarily need to keep 6 months of living expenses. You just need to make sure if you were to lose a client, you would be able to pick up that slack, or you would have enough to replace it. Because outside of getting seriously injured or other events like that, you shouldn't get fired by all your clients. You can also change these scenarios, like let's say Upwork kicks me off the platform. That's a risk you might want to think about. So you should visualize it and see just how many months you might have remaining under these different scenarios. For me, I've always been okay with the ramen budget. So in this case, I could lose the big client and be okay. Give me more free time, and then I still wouldn't be burning money, for instance. Okay. Let's go here. I think let's see, how am I in time? About 12 minutes. Okay. So this is a book that I've had recommended to me, and it's really, really awesome. It goes over structuring yourself in the marketplace, all under the guise of freelancing. So say you want to have a smaller practice. Generally, that practice would be one where you're working with a high degree of domain mastery. So let's say you're the sharpest on large language models right now. That would be one you could charge a lot for, don't need a lot of people working for you, and you can make a good margin. There's other niches, and this goes over lots of pros and cons of different size consulting firms, and then understanding how a place like Deloitte might work with, staffing. They have to have people that know what they're doing. They have to have bodies that can learn from the people that know what they're doing, and then a mix of people that get business too. So this is a whole big, if you want to create a consulting firm, I'd read this book. Even if you're just considering freelancing, it's a great book. Maybe your library has it. Getting a library card saved me a lot of money on Amazon. I used to buy like 2 to 3 books a month. So would recommend a library card if you haven't done that already. What else here? Okay, yeah. So, there's lots of things with having the business. In general, I got better at sales. I'm a little rusty at it now, but years ago when I was getting more clients, I bought some sales books and went through those and sort of had a script, got a little bit better at feeling out clients. My most surprising red flag is or I guess I wrote it as a yellow here, but the most the most over enthusiastic prospects are generally the ones that aren't gonna close. For whatever reason, they're like not seriously evaluating you, and I think they might be a little too emotional going into it. So that's been my most surprising yellow flag. I've also used Reddit quite a bit. There's a freelancing subreddit. There's a lot of good stuff in there too. So yeah, with freelancing, a lot of people sort of fall into it. I even started that way. But once I took it seriously, I realized, this could be a great way to make money and still have free time. So you have to think about what works for you. I never decided I wanted to hire subcontractors or start a consulting firm. I've always wanted to do a little bit more the solopreneur route. So you just sort of have to decide what you want to do and sort of take some steps to get there. If you get too comfortable, you might, make yourself too dependent on your clients, and then again let your skills atrophy. So always spend a little bit of time for personal development, even like 5 hours a week, or even 1 hour could be huge, just to make sure you're still learning relevant skills because you're very isolated as a freelancer. Okay, so now I wanted to switch over to personal financial planning. And with financial planning, there's this organization called the CFP, Certified Financial Planners, and they are an organization that like accredits, so they give certifications on financial planners. And it's generally a pretty good certification from what I found. I actually got into financial planning because I've been doing data extraction for a SaaS company started by certified financial planners. And it's, if you're looking for a financial advisor or someone to help you with your money, someone who's done this coursework is probably someone you want to hire, or at least like a good check mark. It's not a necessary condition, but it's generally a very, very positive one. There's a lot of stuff in here. Just to become an investment advisor, which means I can talk to you about, stock securities, buying and selling those. You only need to take, one test that it took me probably 2 weeks to study for, called the Series 65. So there's not too big of a bar to entry. There's still, fraud disclosures and background checks that are done on our investment advisors. But, financial planning as itself is very useful. And the industry is moving more to doing comprehensive things, like looking at your taxes, your estate planning, and all the things here. Are you saving enough for retirement, etc. With financial planning, it's all about getting your money to sort of work for you a little bit better, being more intentioned about what you're doing. So, like, let's say you're making a lot of money in your W 2 job, but you got a promotion, and now it's like, well, I can retire technically 5 years earlier, but I'm still working. I don't really like the job. What should I do? That's where a financial planner can help you change your mindset on what you're doing with your money and see some other alternatives there. Maybe taking a less high paying job for less stress is an option. You could also take a sabbatical. That's another option to give you a break to focus on things. Maybe start the startup you wanted to try before you get married and have kids or something. All right, so a little bit more on the self employed side. The IRS, they're actually kind of friendly, which is odd. I mean, they do revenue agents, which are the IRS people that investigate companies. They do carry guns, so they're not that friendly. They can lock your business up, but they generally want you to pay taxes, and they work with you if you call them, provided you can get on the phone with them. So I'm not going to go over this now, but they have a website for self-employed individuals. You should check it out if you're curious, if you kind of feel like you like learning things. Um, they have a lot of materials that you can learn. Also, I would encourage everyone just to read your tax return. I'm going to call out some forms here. You can just download these by searching them. And they're really pretty self-explanatory. Like on Schedule C, that's what an LLC would deduct their expenses on and list their income. Advertising is listed as something you can deduct. And then if you Google on the IRS, they'll show you some resources on what counts as an advertising expense. It can get complicated. That's where maybe a tax professional like an enrolled agent, that's what I am, as well as a CPA, could be more useful. But some of the stuff isn't that complicated either. So yeah, if you're self-employed, you want to make sure you pay estimated taxes. Those are due in April, June, September, and January. And it's based on, how much income you're going to make and then some other safe harbors that get a little bit more complicated. But in general, you want to plan to pay taxes throughout the year. You can also withhold money. That's like when your employer has you fill out that form called the W-4, where you say, am I single, married, any exemptions, how much tax they take out of your paycheck to pay throughout the year. You could do a big withholding payment at the end of the year, and that will count as if it was paid through the whole year if you forgot to pay estimated taxes. But that stuff starts to get a little tricky, but that's one option you can do. What else here? So QBI, this is a special one. It's set to expire in 2025. But essentially, your business income can be deducted at 20%, and the exact rules are found in Form 8995. This makes it very complicated if you've ever heard of an S Corp or an LLC or sole proprietorship. Currently, or in the past, it could make more sense to have an S Corp once you started making some good money with your company, but it all depends based on your individual tax situation. And you should run a projection either yourself or with a tax professional to see which structure might make the most sense for taxes. There's a lot of gray areas too that the professional would help you with. But as a freelancer, you would probably want to either have sole proprietorship or really an LLC. You should probably have liability insurance as well, and an attorney to help you with contracts. The S corp is another thing that you can have an LLC taxed as an S corp that you may elect to do. That's what I've done for my freelancing. Now, more on taxes. I forget how most people don't really know too much about taxes anyway, so should start maybe a little bit from the beginning. But this is, the tax code, how it works for tax brackets. We're just looking at what's called ordinary income and capital gains. So capital gains are like, let's say you sell stock. If you held it for over a year, that gets taxed at a different rate. It's either 0, 15, or 20%. And this chart shows you the different levels based on capital gains in your income. So around the 44,000 mark, if you're single in 2023, you would pay 15% on any income over 44,000. Now, I don't think, in the interest of time, I'll go through all these things. I can talk more about taxes, but this is an illustration on an LLC or a sole proprietor being taxed on their freelance income, what the tax would break out to. And it involves that QBI, and there's a special limitation too that breaks things up a bit. But the general gist is, say you made 50,000 in taxable income, you would be taxed 10% on the first 11,000, 12% on the next 11 to 44,000, and then 6% on the next, or sorry, 22% on the next, what did I say? 6,000. So it's all marginal. When you make more money, it doesn't generally tax your old money at a different rate. Now, there are some special bump zones, they call them, where that can be true. So it can get complicated, but here's just an illustration. If you're in the 22% bracket, your next dollar of wage income is taxed at 22%, not including payroll taxes that are 15.3%. So yeah, this is part of the withholding you should be doing throughout the year. Or not withholding, but the estimated tax payments. Or you could do withholding, but again, withholding gets a little complicated. All right. So as a freelancer, it's a good thing for a financial planner to be with someone with variable income, because when your taxes change, when your tax bracket changes, that gives you a lot of opportunity to, realize some gains, put them in a better account for retirement, and do fancier things with your taxes. So this is just a simulation of tax brackets for a freelancer throughout their life. So say you get your first job, you're making okay money, you get a promotion, all of a sudden you're making a lot of money, then you decide to quit your business. When you're starting your new business, you're probably going to be at a lower bracket. So that could be a time to convert some of your assets to Roth. That means you're paying taxes on them today, and then when you take them out when you're retired or whenever you want, you won't be taxed on them. There are some restrictions based on what you can take out. I'll just say for now, when you're old, you can withdraw tax-free from a Roth account. As your income goes up, let's say, I have my rocket ship here, then you might not want to do a Roth. You might want to do other things or defer certain income so you, so you don't pay as much in taxes. And then let's say you sell your company or you start to coast for a bit, that's another time to do Roth conversions. So where a financial planner can help is they can see ahead different things that will be happening to you and help you plan your taxes accordingly. And one thing to call out for freelancers, I used to think this was true, but it's definitely not. Say someone writes you a check in December and you have it sitting in your hand. You can't just wait to cash it till January to get it taxed that year. That's called constructive receipt. Once you could, get the money, it's deemed that you have it if you're a cash-based taxpayer, which most people would be. So no funny shenanigans with that. At least as an enrolled agent, I advise you not to do that because that is, not proper. You may have certain penalties if you do that. Okay, and then, so if you're deciding to leave your business as a freelancer, you might have certain equity compensation, RSUs, other stock options, or especially tax stock options. And here's where, if the number is big, you can do your own Googling on this, but it may make sense to work with a financial planner. There's different strategies you can use. Mark Cuban famously did one where he used options to limit his exposure to any downside of his company, and he was able to keep his value high without realizing any taxes. That's one thing a financial planner has expertise in, one that specializes in equity compensation. It can get very complicated. That slide I showed you on taxes didn't even talk about this alternative minimum tax, and yeah, that can be very confusing. Financial planners generally have software to help them deal with this stuff too. All right, about 5 more minutes here, I think. Am I right? No, I'm probably right about time. Let's see, what do I talk about here? So deductions, ordinary and necessary. I won't talk about depreciation. We can talk about that in a question if you're curious what that means. As a self-employed person, you can deduct your health insurance premium, and you could also get what's called an HSA. Generally, that helps if you don't expect to use insurance very much. It lets you deduct the income this year, let it go tax-free, and then withdraw it later on for qualified medical expenses. So if you save a receipt, let's say you paid for surgery 5 years from now, you had the HSA, and then you're 40 years later, the account grew a lot, you can withdraw that expense 40 years later, tax-free. So it's pretty nice as a retirement vehicle. Financial planner will help you plan for the bad times. I broke my wrist last year, my right hand. Thankfully, it didn't stop me from working, but it was kind of scary. So there's disability insurance, long-term care. Maybe you get in a coma, maybe you don't have anyone to care for you. Financial planner will help with that. Will help you evaluate things like life insurance. Generally, term insurance is pretty good for people if they have someone dependent on them. Could be a good idea. Investments, as data people, I think we might be more interested in, the stock market trying to pick things. I would just caution you on snooping bias. So there's a lot of data on the stock market, but it's not growing very fast. If you know what I mean? If you have like a yearly strategy, there's not that many years. So if you were to try to build a model to look at this and keep analyzing the stock market, you want to be very careful that you don't overanalyze it to the point where, 1 in 100% thing just by chance alone is true. So you sort of bias yourself into thinking you have a winning strategy. So there's a lot of issues with snooping in stocks. For me, I follow what's called Bogleheads, a just diversified portfolio with generally buying broad indexes and using passive management, they call it. It's a lot simpler than active managers, and there's a good amount of research that seems to say that most active managers don't do well. Also, if someone's trying to sell you a strategy where they're picking stocks for you, you got to wonder why they don't just do it for themselves. Because the stock market makes a lot of money if you can do that well. Let's see, almost done here. So in the financial planning profession, historically there's been a lot of commission. So when you buy a stock, someone gets a cut of that. So like insurance, they could get like 20% of the first year premium or something like that. There's another term called fee only. That means you're the only one paying them. There's no one else paying them a commission behind the scenes or a marketing expense to do work for them. AUM stands for assets under management. And this is a pretty standard approach if you don't want to touch your investments, but there's been a movement towards subscription with fixed fee models. So with AUM, they might not talk about your IRA or your 401k as much if they're not managing it. So that's one conflict of interest. Also, if you're very complicated and you don't have much money, they won't want to help you as much. This is where I land as a fixed fee advisor. More specific, project based. I leave when you don't want me anymore. Then what else? On subscription. This is a cool model where someone might estimate how much work you're going to be, and then you just pay them that. So it's kind of like a hybrid. They're still pretty available, but it's a little bit more honest than AUM. And yeah, I use an hourly financial planner myself. It can be pretty simple, but it's good to see someone who's seen your case, hundreds of times. There's a lot of things you might forget about or things you might not be aware of. Stock options are a big reason people see a financial planner. And as always, when you hire someone, talk to multiple people. Speaking of that, a good way I got better at freelancing was I hired people. So once I would go through the process of process of interviewing someone. And then by doing that, I sort of saw, this is what it looks like from the other side. So that really helped me become a better freelancer too. Anyways, yeah, thanks for listening. If you have any questions, guess I'll take them now.
Thanks, Mateo. That was a lot of great information. Oh, I don't have my camera on. Here we go. Boom. I have a ton of questions, but we can open it up to the audience. If anyone wants to raise their hand, come up on stage, ask their question, or oh, here we got one.
Hey, great presentation.
Thanks.
So I was just curious. Okay, so I mostly do a contracting gig, but I have like 20 to 40 hours free per week. So I was thinking about taking some contracts on the side. Do you
Hmm.
think that would be like kind of a hassle whenever I do taxes this year? Or what do you think about like kind of doing that kind of work?
So you're saying just working as a freelancer
Yeah,
on the side of your normal employment?
yeah,
Yeah, no, I mean, there's nothing. I would just keep records of how much they paid you. They'll probably send you a statement at the end of the year saying how much they think they paid you. Um,
right.
but you should still record it. Um, yeah, I would say totally go for it. Just keep some basic records. I would open a separate bank account for your freelancing business. You don't have to, start an LLC, but you could do that. It's generally better for liability reasons to have that and then operate it like a separate business. So yeah, I would say go for it, but probably starting cost could be, $600, $1,000 or so.
All right, appreciate it.
Thanks for the question, Tang. Anyone else? Also, feel free to drop your questions in the chat.
Yeah, and just back on taking your question, if you look at Schedule C, it's a really simple form. And then I also volunteer with the AARP to help people with taxes. You could go to one of those sites for free and have someone help you with your taxes potentially. I don't believe the AARP has any income limits, and we do handle Schedule Cs too. So you could go that option if you're more concerned.
Looks like we got a question from Nick, so let me invite Nick up on the stage.
Yeah, so my internet actually cut out right when you were talking about the health insurance. So I don't know if there's, because I'm actually just about to do that right now. I'm just doing like kind of short-term health insurance. Do you have anything that you recommend as a freelancer?
Yeah. So did you just leave your employer, or are you
No,
currently
I've
with
been
your?
I've been freelancing mostly again through Upwork like you.
Okay. Yeah.
So
Yeah. For me, I've just found using the marketplace worked pretty well. So if you go to healthcare.gov, so then you can search for plans. There's a special category plan called an HSA eligible plan. That's one where the deductible is pretty high. I think it has to be over like 2,500 or 7,000, or in between that range. And then you do get some tax benefits. So I would look up that. I could talk more about that here too. But if you don't plan to use your health insurance much, that's a good option. Say you have some expensive medication, you could look. I know. Speaking of Mark Cuban again, I think he has a company where he has cheaper prescriptions, so you could look that way too. But that's another factor. And then also, I believe there's the state will pay for someone to talk to you about your health insurance too if you go through
I see.
healthcare.gov. But yeah, with disability plans for me, I've gone generally with somewhat of a more reputable name and um, like Blue Cross Blue Shield, Ambetter, someone that I've heard of, and everything's worked out great. They still do cover things even if you don't have what's it called,
Mhm.
uh, a good or if you don't have a low deductible, they still do have negotiated rates and all that.
I see.
So it's yeah.
And did you talk about other platforms that you're using besides Upwork, or are you not even
Um,
freelancing anymore?
no, not as much. Yeah, so these days I'm not really trying to get any more freelancing clients. From the past, it was really Upwork. I tried to look at Fiverr, TopTail, some other things, but Upwork was the best for me. And then I was like, you know what, I should get some personal connections. So that's actually, I guess Shaw,
Mm,
you were saying your old manager. Yeah, I had a personal connection that got me hooked up with a few clients too. So the old-fashioned way is good too.
I
It's
see.
just more of a pain. But yeah, Upwork's been great to me.
So you think Upwork is better than TopTal? Because I thought that they screen people. Like I've never done TopTal. Like I
No, yeah,
just
yeah,
thought that they screen people and they had like higher paying jobs. Or did you
yeah.
have that
No,
experience?
that may work out well. I forget where I landed with TopTail. I think maybe I just didn't want to do the interview or something. I don't know, but
Yeah, that's
um,
what it was for me.
yeah, but it can be good. It just also when they're trying to fit you into their thing, just make sure it's the type of job you want. I've always wanted jobs where I won't work more than 10 to 15 hours for a client. Some of
Mm.
the jobs on those platforms, they're sort of doing more of like a staff aug where they just hire you for a full week. Um, and then in that case, you have to sort of save more. It's a little bit of a different relationship, but it still works. Just depends on what you're going for. I just no personal experience with TopTail besides basic familiarity.
Yeah, thanks for the great questions, Nick. We got one from J-Man in the chat, and then we got another one from Ash. So Josh asks, are there any tax deductions that people who freelance don't usually think of, such as travel or anything else like that?
Yeah, it's a good question. Trying to think. It's normally people think of too many, in my opinion. But
It's the opposite
uh,
problem.
yeah. But let me think. Yields and expense. Let me think. I'm gonna have to take a second thought on that. I mean, the
Yeah.
big one is that QBI deduction is one people don't realize that 20% of your business income is huge, reducing your income. But that's like the tax software will pick that up automatically. Maybe the business use of your utilities. So if you're using, internet, you could prorate it based on, uh, how much percent of the time you're using it for business. But
Could you do
trying
that
to
with like
think.
rent or internet or electricity usage or something like that?
Yeah, those ones. But now rent gets a little more confusing.
Yeah.
For using like a home office, that's what that would generally count as.
Hmm.
It has to be exclusive use. So I use my office for work, for other business, and then for what's it called, just hanging out playing video games and things.
Mm.
And because I use it for those other things, it's not exclusive. So technically, I shouldn't be taking that deduction.
Mm.
But the utilities are an easier one to do.
And then we got a follow up question from J Man. How do you find out what is and isn't deductible?
So if you're an absolute nerd, you can go look at tax court cases. There's a website called Tax Notes that is free to use. So that's where you can get into the nitty gritty of what actually is deductible or not. The IRS will publish instructions on all their forms. That's another good spot to learn what's deductible or not. Generally, what I recommend is Google the things, and then when you see something, try to back it up with an actual authoritative source like the IRS. But again, not to get into too much nitty gritty, but even the IRS instructions can't be relied upon. So that's why you want someone to cite a tax court case or something if it's really fringe. But you could just look up common deductions for my line of business. Like if you're a photographer, you're going to have totally different expenses than a freelancer. Uh, then the other thing to think about is depreciation. Some assets, like a $10,000 camera, you might want to, or you might be forced to, take a deduction every year um, based on some schedule from the IRS. That's called like a depreciation schedule. So you can't deduct it all in one year. You have to do it over X amount of years. That's another thing that could come up for tax planning, or also something to be aware about. You can't just buy $100,000 thing necessarily and deduct that. There's special considerations too.
All right, great. So we got one from Ash. Come on up, Ash. Let's see. Ash, you should have gotten like a notification to come up on stage. Maybe some technical difficulties. Well, while Ash is coming on up, I got a question. So, oh, I actually have a ton of questions. Let me see. Maybe a specific one is like, when does it make sense to transition from like self-employed, single member LLC to like a S corp? Like, what are some of the key factors that one should consider?
So in general, a lot of accountants will recommend an S corp, but they get paid more filing fees to do so. There's a little bit of a conflict of interest there,
Mm-hmm.
but in general, once you're making, let's say, I don't know, 60,000 and up, it could make sense to have an S corp. That doesn't mean it does, but it could. But really, you should just run the numbers to
Okay.
see which is better. In general, an S corp will make sense unless you're, let's say, if you're married, I believe it's somewhere around 300,000, somewhere in that range. Once you're sort of in the 22% bracket, and then there's special exclusions for specified trades or businesses, which most freelancing would fall under.
Okay.
Where if you're in like the sweet spot, it could make sense to keep it as a sole proprietor or LLC. Wait to do the election to be an S corp until after 2025 ends, because that's when all this is up in flux. But there's this QBI deduction, and there's a sweet spot where QBI works out better
Okay.
than the S corp. And then the other issue with an S corp is what's called reasonable compensation. Have you heard of that term with S corp?
Right.
Yeah. So that one, that's where there's not too much stuff out there, and some accountants just sort of say X percent, 50, 60, 40, but really you could do your own audit on what is reasonable pay for myself, and then use that in your figures. But it's a tiny gray area, so whatever you're comfortable with, run the numbers with that.
Okay.
For me, I found an S corp generally made sense after 60,000 or so. But you do have to file quarterly reports, and that's kind of a pain. But
Okay.
again, they're not that scary. But you might want to work with a payroll company like Gusto or what's it called, ADP. Other companies will do that for you.
Okay.
Which could be very.
So it sounds like it's mainly just a financial decision. Run the numbers and see which one is better.
Yeah, and generally just for professional service corporations, you don't want to do it with like every business and think S corps are the best thing ever. There's a lot of things that make them not good if you're building a big company.
Okay.
But yeah, and then you could use someone to do your payroll, like I think somewhere around like $70 a month, maybe $30 a month, somewhere in that range, to handle all those forms for you. But the numbers could make sense in a big way.
So it seems like Ash is typing up the question now. While we're waiting on that, here's another question. Like, how can people connect with you for like financial advice? Like, what types of services do you offer? What does it typically look like?
Yeah, so for me, there's sort of probably three main ways someone would work with me. It's let's say even more, but so there's like a comprehensive financial plan. That's someone that's like, am I doing the right things? So I would go through and say like, okay, we're going to look at everything. We're going to look at your insurance. We're going to look at your estate planning, just basic stuff, But that too, at most people's stage, that wouldn't be that involved. But then, very comprehensive look, and then look at your tax situation, understand where your expenses are going, how your budgeting is doing, or, are you saving, are you spending, are you on track for retirement? I would ask the client, what are your goals? What are you trying to, do in life, and how can I help, figure out the numbers to make that work, or give you some advice on steps to take. So that's the comprehensive offering. With everyone I have on my website, free, click this, schedule a meeting, and you can meet with me. So we can talk more specifics there. Another common one is a second opinion on your investments. So a lot of people might have an investment advisor, someone they knew from school or got hooked up with at some point, and they're like, I feel like they're not doing anything, and I want someone unbiased to take a look. That's another thing that sort of brings people to talking to me. So that's something we could talk about. I could go over generally what I would do is give you a plan. Here's specifically what you should buy and sell, and talk to you about what your risk tolerance is, what you're comfortable in, and then different ways to approach. Let's say you want to have some fun money, you want to pretend to be a stock picker, maybe you're a good one, I don't know, but you can set aside some money, and maybe that can still work with the overall plan. So that's another thing too. And then also taxes, but I'm just trying to focus on taxes for freelancers, solopreneurs, and that type of person too.
That's awesome. Yeah, we'll share the link to Matteo's website so you guys can connect with him, get a free call. Okay, here we go. We got the message in from Ash. Let's see. I know where it is. Quick question. So as a newbie freelancer starting out, would you recommend the few hours per week on different projects approach, or one project over a few weeks in order to get comfortable as a freelancer in terms of considering yourself as a business partner?
Sure. Yeah, I guess that sort of falls under relationship development. Like, if you really have something you do and you know well, you would try to do like a fixed fee product. So you'll say, I'm going to do this. It'll be ready by this date. Here's how much you owe me. And that's one way to get going. With a lot of clients, having a sort of teaser project first helps them get comfortable with you. And that can be a good way to go about it. So start off with an easier deliverable and then scale up to the bigger one as a follow-up project. But let me see here. I think that was your question more on the relationship side, correct? Like building a business partner relationship.
Yeah, I think that was awesome. Any more questions? I love the engagement in the questions. This is the most engagement we've gotten for any workshop. Very exciting.
Oh, awesome.
People love money.
Yeah, it's very personal. Yeah, everyone's got it, I guess.
All right. Any more questions from the audience? All right, guys. Well, thanks for joining the workshop. We do have a survey, so you can give us feedback. Quick 45-second survey. It's one question and then two optional questions. So just dropped in the chat. I'll also call out that we have all our events now on a events calendar on Luma. So if you go to lu.ma/TDE, you'll be able to see all our upcoming events. We have in the Discord. The next one is actually all about ML ops and machine learning engineering. This is deploying your machine learning models into production. So if you're into that kind of stuff, join us in a couple weeks where Paul is going to be giving us a breakdown of how to do that. So with that, let's thank Matteo again for the wonderful talk and free financial advice. I'm sure people will start flooding your inbox after this one.
Well, thanks for having me. It's been a pleasure.
Awesome. All right. Thanks, guys.